Hey everyone, welcome back to the channel. Today we're going to take a look at Thermo Fisher. I'm going to do a handful of different videos on them, probably one doing WACC, maybe one on the company itself, and then one DCF valuation. I don't know if they're over or undervalued. Currently they trade at about $182 billion market cap. And if we look in the last year, I mean, they've gone up pretty significantly, or I guess last 5 years, right? Back in 2016, right, they were trading at about, I don't know, a third the price or so. So they've gone from, an $80 billion company to 180, something like that. But they're a pretty interesting company. If you've never heard of them, they are a kind of biotech life science supplier in a sense. So there's always a lot of, basically, I feel like when anything comes up in the life science industry and someone's like, who should I invest in this? Like, who's going to be impacted? Their name always kind of pops up somehow. So a good example of this was the Pfizer vaccine. It has to be stored in, what is it? Like it was like freezing temperatures during transport and all of this. I don't know where have different has to be kept colder than Antarctica, right? And it was like, what is this? 70 minus 70 Celsius. And I remember reading this article and people were like, Thermo Fisher is the company to buy here. Thermo Fisher actually makes these like crazy refrigerators that hold stuff at like negative 70 degrees. Um, so it's it's an interesting company. Like if you've heard of Nalgene, the water bottles, they own Nalgene, and that's more. They acquired the company for their plastics because Nalgene had like a good proprietary plastic blend that could be used to make high quality lab products. Just all sorts of stuff. They have contract manufacturing for pharmaceuticals. I think they just announced the acquisition. Yeah, right here, contract research organization. So, and they're very acquisitive. They make a lot of large dollar acquisitions and go after it as much as they can. They tried to buy Kyogen recently for like 10 billion, I think. What was it? 11.3 billion, but I think it ended up falling through in 2020. So really interesting company that I think is in an interesting spot in kind of the life science biotech space. A lot of biotechs are very risky, high risk, high reward kind of plays. And I think Thermo Fisher is this company that's basically integrated into any biotech. If a company is doing any form of research and they're doing something with like cells and cultures and all of that, like Thermo Fisher is supplying all the products that that company's using. They have a lot of stuff for vaccine development. They're in the sequencing space, so they compete with like Illumina. They do just a really cool array of stuff. So I think it's a really interesting company, and I'm still trying to wrap my mind completely around everything they do. Um, but first video, we're just going to do a WACC template, and I'll probably come out with a video just going over some of the key, business units of the company and the growth drivers, and then a DCF later this week as well. But first thing, so market value of equity about 182 billion. So pretty big company for all things considered. I mean, it's you know that's a pretty big, large established company. I think their revenue they probably do 30 to 40 billion a year in revenue. So pretty good size. Market value of debt is about 22 billion. This comes from their 10K. If you scroll to the appendix on slide F36, they have the schedule. So I've copied the schedule over into our file. Um, Pretty straightforward. They give you all their dates when they're um, maturing and then the effective interest rate. So I copied over the stat schedule. So I just copied over the due date, effective interest rate, balance, calculate the interest off that balance, and then from there you can calculate weighted average cost of debt. So we tie that stuff back in here. Cost of equity, we're using CAPM for this. So we pull the treasury yield, 2.4%. There's a link to this. You just pull the most recent. Expected return on market, about 8%. This is a historical return S&P 500. There's a link for where that came from. And then we calculate the beta. Really easy. You get the closing price, monthly closing price for the last 5 years for the company, and then also the index you're comparing it to. And if you're not familiar with how to get this, you just go to Yahoo Finance, type in the stock ticker. So TMO for Thermo Fisher. Go ahead and hit historical data here. And then when you see time period, you're going to go 5 year. and then you're going to do monthly, and you're going to hit apply, then you'll hit download, and then this is the adjusted close in both of these columns. And you'll do the exact same thing for SPY, and then the percentage change is just, current period divided by prior period minus one. That gets you the percent change. So nothing too complicated. And then once you have all of that calculated, you'll calculate the variance of SPY and then the covariance of Thermo Fisher and SPY. And then that will give you, we could actually do like .s, I think might give us a little bit better number. Let's see. I don't think it's going to change much, but going from 0.75 to covariance.s to 0.76, right? And if we actually look, they provide us the beta. Yep. So they give us a 5-year monthly beta, 0.76. So you can always check your work, see if you tie to Yahoo Finance. And I mean, honestly, you could skip the whole process of calculating this. I think it's just good to do and to understand. And you can calculate it daily, weekly, monthly. If a company IPO'd a year ago and you don't have 5 years of data, right? Yahoo's not going to give you a number. Just good to know how to do it. But based off all this, right, you get a 6.1% weighted cost of capital, pretty low. And I think they've probably performed, I don't know how they've performed in comparison to um, S&P, but I mean, this is right, this is saying a 6.1% weighted cost of capital is basically saying they're not incredibly risky. The market isn't expecting any crazy growth from them. Um, you know, the cost equity is 6.6%. Investors are looking at this probably very much like a blue chip kind of stable company. They pay dividends, it looks like, right? So forward dividend dollar. So they're paying dividends out. They're just like a slow, steady cash growth, cash flowing company that acquires new things and slowly gets bigger. Um, right. I mean, if we look at this, they went from 147 to 464. I guess we actually have the data in here. So S&P doubled in that time and they about tripled. So they are growing faster than the S&P. So they've definitely had some good times in there, right? And it really looks like from what March of 20 till today, they've seen a ton of growth. I think if you probably excluded that, right, they went from 330, 150 to 330, so they about doubled in that time from till the end of 19. And if we look at the S&P, how did they do in that same period? 190 to December of 19 to, so yeah, I mean they're growing a little bit faster than the S&P, so chugging along. But the market doesn't view them very risky, so I think that's a good sign. But we'll have another video coming out tomorrow, just kind of going over more of the company and talking about some of its interesting businesses and what it really does, and why I find it so interesting. I think it's a good way to get into the biotech space without being in the biotech space. Um, so with that being said, what I mean is, if you go buy some small Twist Biosciences or something, right? Like they're either gonna hit drug development or they're not, and it's either gonna be really good or really bad. Um, so I think this is like a good safe play, and as long as biotech as an industry continues to grow, Thermo Fisher directly benefits from that. So definitely think it's an interesting spot. But thanks for tuning in. Leave any questions or comments you have below, and I'll get back to you. Thanks so much.